David, thank you very much for joining us today. Denison has released a lot of significant news of late, and I thought it would be a good idea for you and I just to sit down and go through some of this news in more detail. And the first thing I want to touch on is the fact that Denison is now a uranium producer through its JV with Orano Canada. When did production begin at McClean Lake Mine, and how is the ramp up going?
Yeah, Jimmy, it was incredible opportunity for me to be up there for a ribbon cutting in July. But mining started at our McLean North deposit, which is part of our McClean Lake joint venture with global nuclear fuel company Orano. They operate that project. It started in the end of the second quarter, and in the third quarter, we've already started processing that ore and packaging those into finished goods. So uh, really an exciting development for our company. This is first time McClean Lake's been in production in roughly 2 decades, and we're excited to be back now into the ranks of producer. Now, McClean's an interesting story because the mill is well known. Folks know that we own a 22.5% interest in the McClean Lake Mill, one of the largest uranium processing plants in the world, and it's been operating for several years under a toll milling agreement with ore coming from Cigar Lake. But what they haven't always known about is the fact that we had unmined deposits there. And so the mining at McLean North is now using our patented Sabre mining method, which extracts the ore from surface without having to go underground via pit or underground mine. And this allows us to be very nimble and target high-grade deposits that aren't too deep. And thus far, things are going well, and we're really proud to be able to be back in production and looking forward to be able to marketing this production to our customers.
And what will Denison do with its share of those pounds?
Yeah, so interestingly, this joint venture does allow us to take our share of production in kind, and so we will receive deliveries from the McClean Lake joint venture at conversion facilities in North America, and then our plan is to market that independently to our customer base that we're building to be able to place ultimately our larger scale production from Phoenix. So it's a really useful part of our commercial efforts right now to be able to be speaking to utilities around the world and talking to them not just about future Phoenix production, but production we have currently from McClean Lake and also some of our uranium holdings that we have from our physical uranium purchase of years ago.
And David, another news event from Denison is the preliminary economic assessment for ISR at Midwest. And as a reminder to our viewers, Midwest is another JV with Orano. Take us through the highlights of this PEA.
Yeah, Jimmy, the PEA was really exciting actually for us on multiple fronts, technical, partnership and economic. The Midwest is a project that's been around for a long time. It's got, reasonably large high-grade deposit called the Midwest Main deposit, and that's what the PEA focuses on. And what we've done is take our knowledge and experience for the de-risking of ISR mining in the Athabasca Basin, and we've actually brought it to our partner Orano, and now together with EngComp, which is an independent third-party QP, to develop a very preliminary view of how ISR mining might work at Midwest. And it isn't just desktop. While the study is generally a desktop study, we have done and carried out field programs at Midwest over the last 2 years or so, where we've actually achieved positive results for verification of characteristics necessary for ISR mining. And so that information and that knowledge has been woven into this study. And what the study shows is the potential for ISR to work technically at Midwest, but also for ISR to be very positive on it from an economic standpoint. You mentioned the fact that Orano's our partner there. Well, Orano's also our partner at the McLean Mill from the McClean Lake joint venture. And so the study for Midwest has assumed that we would be sending production from the ISR well field to the McLean Mill for processing. And that has certainly helped with the internal rate of return and the overall NPV because we're not building a new processing plant at Midwest. We're building an ISR well field in this PEA study and then taking the recovered uranium-bearing solution from that well field and bringing it a relatively short distance to McClean Lake for processing and packaging into a finished product. So you've got high grades from the Midwest main deposit paired up with excellent infrastructure in the immediate area, as well as from the McClean Mill, generating some really positive NPVs. We're talking about a $1 billion after-tax NPV for the joint venture, and with Denison's share of the JV being around 25%, that's $250 million in attributable NPV from this PEA for Denison.
And as you mentioned, the economics are very robust, but one of the things that really stood out to me was the internal rate of return of 83% and also the very short payback of 9 months. How are you able to get such a high internal rate of return?
Yeah, it is an exceptional part of that project. It looks a lot like Phoenix, actually, from that standpoint. Phoenix is similar. It's slightly higher IRR, but it's in the case of Midwest. What you're leveraging is the low capex, right? So you've because of the existing McClean Mill, because of the infrastructure that's right around that site already, the project has initial capital costs that are more in the range of 250 million for 100% of the joint venture. And that's quite low. And then you layer on the fact that the ISR mining method's low cost and the grades at the deposit, Midwest Main, are high, and you end up with these very low operating costs. So to get that IRR, you've got quite a low comparative to industry norms upfront capex that gets repaid, if I will, very quickly by production because we have this ultra high margin coming from those low OPEX costs. So that's what generates that incredible return. And with that, you get very quick payback. And those are the kind of characteristics you want in a mining project.
And now that you've had these positive results from the PEA, what are the next steps at Midwest?
Yeah, some of that to be determined based on our work with Orano and budgets for future years. But certainly our interest is in continuing the de-risking of the application of ISR at Midwest. Important to flag that we're also evaluating SABRE at Midwest. And so that's the mining method that we are successfully deploying right now at McClean North. So more than one option for Midwest. And together the joint venture will be working through de-risking and evaluation of both of those methods with a view of advancing towards ultimately a development decision. I mean, we certainly have a joint objective to bring Midwest into production as soon as reasonably possible.
And another piece of news that you released recently was the high-grade mineralization at both Griffin and also McLean South. Can you just speak to the significance of these discoveries and what will it mean to future growth at Denison?
Yeah, Jimmy, we spend so much time talking about Phoenix, and there's a good reason for that because it's an excellent project and it's very important to our company. But we absolutely have a portfolio beyond Phoenix, and the exploration results that we put out this summer for McLean South and Griffin, they just highlight the incredible potential we have in the portfolio. At McLean South, really exciting story there. This deposit is located actually quite close to McLean North, slightly to the south, as the name would suggest. But high-grade mineralization discovered there a few years ago, in and around other previously known mineralization. And this was the first year that we'd been back in several years to test some of that mineralization at McLean South and came back with some excellent results again. The potential here is, McLean South, it's already on our McClean Lake property. Can the project be advanced either as SABRE or even potentially ISR to create a source of mill feed following McLean North? So very exciting on that front. And then at Griffin, this is a project that, or a deposit that we haven't drilled in several years. Our focus following the 2018 PFS for Wheeler River shifted entirely to de-risking Phoenix for ISR mining. And now that we're very close to executing on that, we've already turned our attention to looking at, whether Griffin could be queued up next. And to do that, we first have to carry out a little bit more of our own systematic de-risking on that project. And the purpose was to get back at Griffin, do a little more delineation drilling, but also sneak in a few expansion potential holes. And sure enough, on one of just a very few holes that we drilled that had the, objective of resource expansion, we hit some high grades in a pretty open area that's associated with the D series lenses. And now, without doing a whole Griffin summary, the A series lenses is where the bulk of the mineralization is. The D series lenses have some meaningful high grade mineralization. And the key is high grades, because when we can extend these areas of high grade mineralization, there's potential for the pounds to add up quickly. And that's what we think we might have, found there as a potential area of growth associated with the D lenses that we'd not previously drilled off. So that's an area that we're absolutely more interested. We're very interested in following up more in the future, and just again shows the potential of our portfolio to deliver more pounds from existing deposits or existing projects, and adding to the portfolio of assets that we can invest in once we've executed successfully on Phoenix.
And David, just because we're on the topic of exploration and drilling, how many rigs do you currently have going? And maybe you can just touch on some of your targets.
Yeah, Jimmy, we're working a portfolio of projects, and so I don't always think of it in terms of number of rigs. We've got activity this summer at our Waterbury property, which is a very exciting property located adjacent to Midwest, also adjacent to the Rough Rider project, so up in that McClean Lake corridor. And we're planning to be back at Wheeler later this fall. But what's very exciting and why it's hard to measure rigs is because we've put a lot of our sort of non-core exploration properties into partner companies now. And so there's an incredible amount of activity happening across those companies. We're invested in a company called Cosa Resources. They're active on a Murphy Lake North property that we vended into their company. They've got a drill program ongoing right there now. And then we vended a series of properties into a company called Foremost Clean Energy. Again, big shareholder there, 20% range. And they've got multiple projects that they've been working this summer. So all of those transactions really designed to amplify like our exposure to discovery in the basin, without having to like divert our focus from Phoenix. So quite a number of projects that we have investments in directly are being worked this summer. It's quite a big section in our MD&A now, when you look at all those different projects, and we're only reporting on things that have notable results, and there are several.
So the last thing I want to touch on is the fact that Denison received the provincial environmental assessment approval for the Phoenix project. Maybe you can just tell us, what does this mean for the project, and what does it mean to moving the project forward toward receiving the license for construction?
Right. Well, Jimmy, this was a major accomplishment for us, several years in the making, and I know that sounds discouraging that it's been several years, but really we're now at the truly final stages and final months of the regulatory and permitting process, to be able to be authorized to construct the Phoenix project, and that is incredibly exciting. We have put many years of hard work in, and what the provincial EA approval reflects is one of the key approvals being in hand. We need provincial approval from the EA, and we need a provincial permit for pollutant control facility. That's essentially the mining permit. And we need federal approval for the EA, as well as the license to construct. The two federal approvals are already set up to occur in association with the Canadian Nuclear Safety Commission's public hearings. So those are set. We will be carrying out public hearings in October and December of this year, and then a decision expected in early 2026. So what the provincial approval really represents is the start of the final stage of this process, where what we're focused on now is receipt of approvals rather than submission of materials and working through queries. We're now in the receipt of approvals sort of window on the project. And overall, the project has a great environmental profile, and you can see that the province of Saskatchewan is incredibly excited about our project moving forward. Our news release highlights a quote from Premier Scott Moe, and as well as the Minister of Environment, speaking about our project and how positively they see Saskatchewan and our project fitting into Canada's role in becoming an energy superpower. So really a tremendous accomplishment for us, and starts this final phase now of approval receipts.
And once you receive the final approvals from the federal government, then you'll make a construction decision.
That's right, Jimmy. I mean, we've been investing in this project for several years. We're already carrying out quite an aggressive long lead procurement process so that we have materials and key equipment en route for construction, and so that procurement isn't a delay in execution. But really the objective is for us to be ready such that when approvals are in hand, procurement is sorted, construction planning is sorted. I mean, we're uh, roughly 80% done total engineering on the project, which is incredible for a mining project. I mean, those who might not know this, many mining projects, almost all mining projects, are being executed with far less total engineering at the start of construction. So our job is to be ready, ready on project finance, ready on engineering, ready on procurement, ready on construction planning. And when that final approval comes in from the federal government, we want to be able to make a final investment decision promptly and then start construction as quickly as reasonably possible.
And David, before we wrap it up, maybe you can just give us a sense of what you're seeing or hearing from investors. You've had a lot of positive news. The sector overall has had a lot of positive news here in the last few months. Looks like it's really catching a bid now. Maybe you can just speak to that.
Yeah, look, Jimmy, the year was interesting. Thus has been interesting thus far. We had some periods of time in there where the uranium market was not, and uranium equities were not moving very well. I think we've done really well with our news flow. There were some that thought, well, we didn't have much going on this year. We've shown them otherwise in the last few weeks that actually quite a lot was going on. It's just that it's taken us a bit of time to get it finished, the work finished and into the market. And I think we've done really well to time that because our news is coming at a time where you certainly see the uranium sector catching more interest. So look, I think we're in a great spot for the sector. We're in the summer. We've got strong share prices. The uranium market is doing well, but we are seeing, importantly, sort of the early indicators of an increase in utility procurement activity. We've seen some early movers from the utilities acting in the summer, and that tells me that we might see more utilities, executing on procurement plans through the fall, which can be and is typically a busier season. So to the extent we see uranium prices moving up through the fall, the equities are really primed to move from that already. So it's a nice setup, and our news flow has shown investors that are already in the name or they're looking at the name that we have quite a lot going on, and we're a very exciting story to be invested in.
David, as we wrap up, you've already provided a lot of detail on what you and your team are working toward, but maybe you can just summarize for investors what they can expect in terms of news flow here in the coming months from Denison.
Yeah, Jimmy, we're absolutely going to be transitioning our story into one around project execution. As every day that's going by, we're that much closer to final approvals for the project and being in a place to make that FID decision. So expect more information around our degree of readiness, and at the same time, the project financing side of things and the commercial activities, our relationships and our efforts to build relationships with customers becomes more front and center. So you'll expect a bit of a transition there. And at the same time, we'll keep that parallel news flow coming on our development and exploration portfolio. We are long-term bulls in this sector. We think we have great assets and a great portfolio, and we've been convinced and have a great conviction that we should be investing in that portfolio over the last several years, and we'll continue to do that. So really exciting times for our story. And we're really pleased to be able to be on with you and talk about all this great news that we've just put out.
Well, David, I want to thank you very much for making time today and providing us with an update on what's happening at Denison, and I look forward to our next update.
Yeah, thanks very much, Jimmy.